I'm having like some cash flow issues where I need to put some of my
Business.
own, yeah, I need to put some of my own money into the business to make sure I meet the S corp payroll. So I'm making a owner equity, you
Okay,
know.
gotcha. Okay. So your question is when cash flow's tight for the business, is it okay to loan money from the personal account to the business? And the answer is yes, that's completely okay. In fact, you have to do that in the beginning generally to get your company up and running. What you want to do with that is you want to make sure that you track that.
Okay.
Because if you don't track that properly, your accountant will show that as revenue and not as a personal loan or shareholder loan. And now you're paying taxes on it. So
Okay.
just make sure when you loan money to your corporation, you track it in your bookkeeping software as a loan. And then when you go to pay yourself, once the cash flow crisis has been resolved, and
Mhm.
there's now money in the business account, instead of doing it as a distribution or as a W-2 salary or bonus, do it as a loan payback so
Okay.
you're not paying income tax on that money that you loaned the company.
100% of my income, my S corp W2 income
Yep. Mhm.
is going into the 401k.
Okay.
So I don't pay
So
tax.
is there a problem with that?
Is there a problem that the money actually came from me personally to the business to go there?
No. So you're saying like if you went and gave your company 20,000, so you, the owner of the company, put $20,000 out of your personal money into the business, and then the business paid that to you via salary and put that into a 401k, is that a problem?
Right. That's all
Not
it
at
was.
all. Not at all.
Okay.
So let me repeat that back to you.
Okay.
Your question is, can you have 100% of your W-2 required paycheck out of your corporation? Because when you're an S Corp or C Corp, you're required to have a W-2 salary for reasonable wages. And your question is, can you have 100% of your salary going into your 401k? And the answer is yes, as long as you don't go over the maximum amount. So if the maximum
Mhm.
amount is $18,000 to your 401k, you can't go over 18,000.
Got it.
You can, if you do have a salary more than 18,000, open up an HSA. You also can have a Roth IRA. You can also have other types of tax deferred retirement accounts. So can 100% of your salary go into these tax deferred retirement accounts? 100% yes, as long as you don't go over the maximum amount that you can legally put into those accounts.
Aggregated all together across all.
Yeah. So like you can have a 401k, a Roth 401k, or a regular 401k. You can have a Roth IRA. You can have an HSA. You can have all three. And I recommend all three. HSA is health savings account. You can put $4,000 a year into it.
Hmm.
That's how I pay for my massages. I get a massage every Friday and I pay way more than 4,000 a year in massages, but I make my massages tax deductible. Now, if you're not into getting massages and you don't have a lot of health issues and you're not doing biohacking and stuff like that, then get an HSA as long as your deductible, I believe it's over $2,500. They call it a high deductible, which is not really that high, but
Hmm.
just look into the details of it. So as long as you have a high deductible health insurance, you can put 4 grand per person in your household into this account. If you don't use that money, you can invest it into real estate, stocks, bonds, mutual funds, gold, silver, crypto. So you can literally put another 4,000 in this HSA and then use that HSA instead of for healthcare, use the HSA for real estate investing.
So how long after you put it in there can you use it for
immediately.
really?
Yeah.
Wow.
Yeah. Just know though, if you put the $4,000 in and then you go buy Airbnb and you use the 4,000 as the down payment, the HSA owns that Airbnb. You don't own
Mm.
the Airbnb. Or if you buy stock, if you want to buy Apple stock, the HSA owns the Apple stock.
Is it a entity? Like it's a LLC or something?
No, it's just an HSA. You don't have to get into the details of being an LLC or a corporation or anything. It's just HSA.
Well, how
You
does it
literally just invest it. It'll just show up on your tax return. It's under your personal. So you will personally go buy Apple stock.
hmm
Now, if you're doing real estate, you probably should do an LLC and set it up all correct like that. But if you're just going to go buy Apple stock or which I don't recommend mutual funds, but if you're going to buy silver, gold, or something with it, there's
hmm
really there's a little tiny bit of paperwork, but you don't have to do the whole LLC thing. You just keep track of it. At the end of the year, you fill out your HSA form. When did the money go in? How much went in? Where did it go? And where did it go to?